Okay, so for today's session, as I said, we'll actually be learning on how you can actually be able to trade with these specific robots that we call the DERIV AI. It's actually an over-under robot that has a capacity to analyze the market. Even though this robot is auto-analysis, you can actually be able to do your own analysis and the robot will actually give you the best results, yeah? So, on this side, I'm actually logged in. So I normally work with what you call the screen split, yeah, so that I can actually be able to, that is multitask. So when you actually have, that is Windows 11, you really don't need to have so many devices, yeah. When you are actually doing, that is trading. You can just use one device and everything is will be okay. So let me first of all start by demonstrating the features of these robots. So just click for the robots, then go to the DERIV AI. This is a specific robot. So just click, you just need to click the robot, then give it a minute, then it will be loaded to your DERIV account. The robot is actually massive, so you really don't, even if it takes about 20 seconds or 10 seconds to load, you just need to be patient. You just need to be patient. So this is the robot right now. Okay, so the robot can actually trade both over and under, and you can actually see this way. You can actually be able to set your predictions, recoveries. You can actually be able to set the stake, target profit, and the stop loss. So assuming I'm on volatility, for example, 10-1S, and I want to trade something like over, yeah, I want to trade, for example, over, let's say over 1, and I want a recovery of something like over 3. The robots also have what you call the spread material, and I'm using a stake of $5. I'm using a set a target profit of something like 10, yeah. Then stop loss, let's say 100, yeah. Then if I just click run, this robot will actually be trading that is over 0, that is over 1. The moment you lose a trade, the robot will switch to over 3. Then it will actually apply what we call a spread material to make what you call the recoveries. The robot will actually use a spread material to make the recoveries. If you go on this side, you can actually see the robot is actually doing what you call the market analysis. For example, when you are trading over 1, the robot will start executing the trades when over 1 market hits 80%. So if that market is not 80% and above, the robot will not execute the trades. Now, this is what you call the spread. This is what you call, I'll actually show you what you call the spread material, but something that I want to show you, I want to see when these robots actually started executing the contracts, like what was the percentage for the over market. Should be 80% and above. Okay, just check. Over 1 market is 100%. That's when this robot will started executing the contract. So if the market was less than 100%, for example, the robot will not execute the trades. You can actually see the market was less than 80. Right now it's above 80, and the robot has started that is executing that is the contracts. Yeah. So it's actually that simple. It's actually that simple. So let me just stop it, and I just demonstrate something here. Okay, let's see. You can actually see the market was 75. The market was 75. The moment this market hit 80, that's when this robot that is purchased the first contract here, which resulted in, I think, a loss. Yeah, which resulted in a loss. So this robot has what you call a inbuilt market analysis. Then it will continue to execute those contracts continuously as long as the moment you hit a loss, we have set our recovery as over 3. Over 3 market, that is, the robot will continue executing the contracts as long as the market, over 3 market is 65% and above. You can actually see we hit our first loss here. Then when this robot was actually making a recovery, the market was 65%. So we see if we make a recovery of over 3, the market must be 60% and above. So like this robot is trading at equilibrium. Because over 3 market, the chance of winning over 3 market is 60%. So this robot will start trading, will start trading or will continue trading as long as over 3 market is above 60%, like the market is above the point of equilibrium, which is 60%. And that's why this robot was actually making a recovery at that point. So that is market analysis part for these specific robots. That is just what I wanted to show you, like the robot is auto analysis. Now, but even though the robot is auto analysis, you can actually be able to do your own analysis, which will actually give this robot the best recoveries. and instant recoveries. So this is where you set your first prediction. Then this is where you set prediction after loss. Then we also have these other part where you set up, this is our stake. This is where you set up your target profit and the stop loss. Those are the only parameters that you need to know. For example, if you are trading something like under on 51S, set up under there. Our first prediction, for example, I want to trade something currency under 7 with a recovery of something like under 5 or even under 4 or even under 6. You just set it up there. Then you set up all the other parameters, the target profit, stop loss, and just click run. Yeah. So this robot will start executing the contracts. That is when because we are trading a 70 trade when the market hits 70% and that is 70% and above, and you can actually see right now the robot is executing those contracts. It's actually executing those contracts. Like for example, okay, I'm not sure. Let me check. The meeting is still on. Yeah, I think we are still on. Okay. So the robot will continue executing these contracts. Very, very simple. So in case you want to trade something like, assuming you want to trade something like you want to trade like under 6, I'll make a 6 apple. For the recovery, you set it up here. For example, you want to recover. For example, you might be even trading something like under 4 like that. Then it can be making a recovery in something under 5 or even under 6. Yeah, depending on how you do your market analysis. Okay, so now let's go to the market analysis part. For example, that is for this specific robot when you are trading. We'll start with over, then we'll go to the under market. We'll start with over, then we go to the market. So the first thing I said, okay, just a minute. Let's see how many people we have. We have 48. Okay, that's good. So the first thing, you do, for example, we'll start with the market like over 0. You can actually trade over 0 in this market. Although I really don't recommend people to trade over 0 market, because you'll have to overstay in the market for you to make some good profit. I would recommend you start trading with markets for over 1, over 2. Those are the markets that will actually be able to make a fortune within a very short time and be in a position to leave the market before you start hitting on losses. So the first thing you do, you just need to go to the DERIV analysis tool, then go to the DERIV analysis here, then over and unders. We can switch these to something like 150, or even you can use 250. Okay, let me use 250. Let me use 250. Okay, so let me refresh here. Okay, the reason why I'm doing that is, yeah, it's okay now. It's fine now. So just click right. You can mepunguza size ya screen. Then upper, you can do 250, you can do 150. It's all right. So, for example, I want us to analyze that is over 2 markets. For example, I want us to analyze over 2 markets, the recovery of something like over 4, like that. Or even let's start with over 1, the recovery of something like over 4. We can do a stick of something like 5, target profit of 10. That's our stop loss. So first, the first thing, you just click over 2 markets. The chance of winning over 2 markets is actually 80%. The chance of winning over, I mean not over 2, but over one market. Let me just click over 1. The chance of winning over 1 market is actually 80%. So when you are actually starting to trade on this specific market over, make sure this over is it should be 80% and above. 80% and above. Then our recovery market, which is over 4, the chance of over 4 market is actually a 50-50 chance market. So whenever you are starting to trade in this market, over 4 market should be 55% and above. 55% and above. So just click 1 there and confirm if the market is 80%, and you can actually see it less than 80. So let's look for a market that is above 80%. So we have this one, it's around 84. Let's see over 4 markets. Over 4 market is actually at 54%, should be from 55% and above. But even though this one is okay, so this is volatility 25 1S. Come and do the setup here. Setup over 1, recovery of over 4. The next thing you do, since we have confirmed this, we need to go to that is the analysis tool and go to the circles. That is the circles here. For a 25 1S, you need to make sure when you are trading, the green bar and the blue bar should be above digit 4, which is our recovery market. Should be above digit 4, which is our recovery market. Then we also have this red bar. We really don't mind about the position of the red bar, but green bar and blue bar. This blue bar, this is the second most appearing digit. So I head to lazima ningeweka hii blue bar hapo so that it can be easier for you to actually make that observation. The next thing we do, we need to go to the charts. We can just go to the charts, volatility 25 1S, and since we want to trade over, make sure the market is on a rise. In this case, you can actually see the market is on a fall. I would really tell you not to trade with a reversal, especially when you are trading this market with low payouts, because the moment you run that bot, you never know your market answer. For example, in this case, you can actually see that candlestick is actually retesting. You can, when it comes to the time frame, you can use around 2 or even 3 minutes or 5 minutes. But myself, I would prefer to use something like 2 minutes. But the moment you trade with 1 minute, like the candlestick will tend to be to have some, it will not be easy for you to actually make good observation, because the market will be highly volatile, because we are analyzing the market using a low time frame. So, but if you set something like 3 minutes, you can actually be able to make some good observation. For example, in this case, you can actually see the candlestick is taking upward momentum. Yeah. So I would really advise you, when you are trading this market with the low payout, avoid instances where you are actually trading with a foreign candlestick if it's an over market, because that candlestick, for example, if you run the bot when the candlestick is actually retesting, that is actually reversing, you never know the market itaendelea to move forward in, unaweza just go for about kitu kama 5 runs, then the market the candlestick starts to fall again. So let's confirm if the market is okay, 56 and above. The next thing you do, you just need to run your bot. Yeah. So hii haina ile yenye unasema ni entry point. The robot will actually get the entry point for you. So you just need to run. Na unaona hapa tumerun bot yetu kama imeshaanza. The robot immediately started executing the contracts. So as you take your trades, just make sure that this candlestick is on a continuous. The candlestick should be on a continuous rise. That moment when this candlestick starts retesting, right now, this candlestick has started now, is actually now retesting. You are supposed to make an exit. So just in case you get into this market and you hit on losses, for example, you can actually see in this case, by just looking at the journal part, you can actually be able to tell that is what is actually happening, because there's a contract which is actually a win. Yeah. So you can actually see this one here. It's actually a win. Our last trade was actually a win. You can go to the other trade. Okay. So let's say, for example, you get to this market and you start trading. And the moment you just run your bot, for example, you are trading over. When you're trading over, the candlestick should be rising. Yeah. So the moment you start running your robot, you take a few contracts, then the candlestick starts falling. Yeah. Okay. It's not a signal, because this candlestick is actually using what you call the ticks. It's actually moving with ticks. For example, inapanda na tick moja, tick ya pili, ya tatu, inashuka kidogo. Inaweza kuwa ina move for in a rise with 5 ticks, then ina retest na move ina fall na ticks kama mbili, then inapanda tena na ticks 4, inashuka na moja. That is a rise. So in such a scenario, you don't have to actually stop the robot because the candlestick may fall na ticks mbili. But there are those instances where this candlestick will actually start retesting continuously. Yeah, the candlestick will start retesting continuously. In such a scenario, like when the candlestick starts retesting continuously, like the candlestick starts falling continuously and you are trading an over market and already you find yourself like you have hit 3 losses. There is no need of waiting for the third loss. Just stop your robot because it's actually very hard for you to actually recover because the market has already reversed. The market is already against you. So you better stop that bot. Just stop that bot because by the end of the day, you'll blow your account. It's that simple. Okay, so if you check in this case, we are actually trading over 4. We are actually trading over 1 with a recovery of over 4. Yeah, you can actually see when it comes to over 4 market, the market has already fluctuated. If you go to the market here, that is on the chart, you can actually see this market on this side is like the percentages has actually reduced. Yeah, if you come on this other side, you can actually see the candlestick is on a fall. That's why, like, the moment these percentages on this side here, that is over 4 markets, start decreasing, always on this other side, when it comes to the candlestick must be on the fall. Will always be on the fall. Yeah, so you can stay here, you can stick to the candlestick. I think the candlestick are way more better. You can actually be able to see those movements, how the candlestick is actually growing. If you come on this other side, for example, you can actually see the candlestick is around 53, and I think we had gone up to something almost 58%, and you can actually see now the candlestick, this candlestick is on a fall, now a small retest. So whenever you are trading in any over market, the candlestick should be on a rise. Any over market, the candlestick should be on a rise. Any under market, the candlestick should be on a fall. Any under market, the candlestick should be on a fall. Yeah. Okay, so this is what I was actually recommending. Whenever you are trading any, or like you are trading these markets, over markets with small pair, for example, over 1, over 2, yeah, over 3, make sure market in unaingia, make sure like if it's a market like this one, this is best for under. Even though like you may do a timing and get into this market, take about 5 contracts and exit the market. But I would recommend, for example, if this candlestick, for example, in this case, it's a red candlestick. Yeah, this means this candlestick is actually falling more than it's actually rising. That's why the candlestick is red. Yeah, I would recommend when you are trading this market with small payouts, you better check the color codes very carefully. But in case you are trading this high risk market with high payout, for example, over 5 and 4, the color codes wouldn't really mind so much because, for example, in this market, you can trade over because you just need to wait for this candlestick to grow consistently. Then when these candlesticks start retesting, you just run your bot and take about 3 or 4 runs, then stop your bot. But these markets with low payout, you'll have to take almost around 15 contracts before you hit your TP. And in case you get into those markets with, for example, in this case, you want to trade over and get to this market with when these markets start retesting, you'll only have taken about 5 contracts before these markets start retesting. Then if you continue trading, what will actually happen? By the end of the day, you'll blow your account. Okay, so let's go. So that was actually over 1. So over 1, when you're actually trading over 1, this percentage to be around 80% and above over 1. When you are actually trading over 2, over the chance of losing and over winning over 2 market is 70%. So you should make sure over 2 market is 70% and above. It should be 70% and above. Then if you are doing a recovery with over 4, that means this percentage here, this one should be that is 50% and above. Should be 50% and above. In case you are trading something like over 3 with a recovery over 4, over 3 market here, the chance of that is losing. That is winning over 3 market is actually 60%. That means over 3 market should always, on this part, the over 3 market should be 60% and above. In case you are trading under, when it comes to the recovery, it should always be above. It should always be, that is 55% and above. 55% and above. Now, after Now, when it comes to over market, after doing that consideration, that is on error analysis, the next thing that you consider is you need to come on these other parts. In case you are trading, that is you are doing a recovery with over 4. The green bar and the blue bar. The green bar is the most appearing. The blue bar is the second most appearing. They should all be above digit 4. They should all be above digit 4. But when it comes to the the red bar, it can be either below digit 4 or even above digit 4. But these two, they must be above digit 4. These two must be above digit 4. So then when it comes to the entry point, usually for this specific robot, I didn't give the specific entry point for this one, because the robot will actually get an entry for itself. Yeah, the moment you just run the robot, it won't start executing the contracts that is at that specific moment, because it will first of all have to analyze the market. So the robot will actually get an entry. Yeah, it will actually fetch an entry. So for these two, they should always be above that is a recovery. In case you are recovering with it, for example, you are trading over 1, recovering with over 3. Yeah, that is the green bar and the blue bar should be above digit 3. For example, they should be on digit 4 to 9. Very simple. Okay, that is for the over market. That is for the over market. Then something else, after you have considered all those factors, the next thing you do, you need to come on the chart. And because you are trading over, you need to make sure the candlestick is on rise. The candlestick should be on a continuous rise. Like, for example, these are continuous rise. Yeah, the candlestick is rising more than it's actually falling. So this market is best for over. So assuming all the other factors were okay, this was a good market in ungeingia na upige over. Sawa sawa. It's that simple. Okay, now let's go to when you are trading something like under. So for this specific robot, when it comes to trading under, you'll always start trading from under 8, under 7. This robot actually can't trade that is under 9. It will take a very long time before it start executing the trade. So I would recommend you start trading that is from under 8, under 7, under 6. Yeah. So assuming you are trading under, for example, under 8, let me just do a setup here. Let's say, for example, you are trading under 8 and recovering with something under 5. So just set up 5 there. You are trading under 8 and recovering something under 5. I'm doing a stake of 5, target profit of 20. That is 10. So when it comes to the target profit, I said your target profit should always be 4 times your stake, or something less than that. Should not be more than 4 times your stake, because the moment you set your target profit so high, you'll have to take so many contracts before you hit your target profit, and that can actually impact on your trades. By the end of the day, you might be closing your trades on losses because you overstayed in the market reversals, yeah, and market uncertainties ikakupata bado ukiwa kwa market, and by the end of the day you may find yourself blowing your account. So how do you go about it? So assuming I'm trading under 8, recovering with under 5, or even something under 6, how do you go about it? How do you do the analysis? So the first thing you do, you need to go on ERIT. This is actually ERIT analysis. So we need to check under 8 market. So we say whenever you are trading that is over 1, the percentage should be 80% and above. So the same thing will actually apply when you're actually trading under 8. Under 8, the percentage for under 8 should always be, that is 80% and above. In this case, you can actually see it's that is 79% and above. So you need to switch these volatilities until you find a volatility which has that is 80% and above. For example, now this one. Now, when it comes to if you are doing a recovery with something like under 5 or even under 6, in case you are doing a recovery with under 6, yeah, under 6. So the chance of winning under 6 market, is actually that is 60%. That means when you are trading this market, under 6 market should be 60, that is around 65% and above, 65% and above, yeah. You can actually see now in this case, under 6 market is actually 58% and above. In case you are recovering with under 5, your recovery is actually under 5, yeah. Under 5 market is a 50-50 chance market. So when you are rising under 5 market should always be 55% and above. In this case, you can actually see it's around 48. So let's see if we can get a better market. For example, I think this one is way more better. let me see if we can get, okay, so in case we don't get, then we'll go to 25 1S. That's 75, not good at all. This is 46. I think 25 is better. So it was 25. Yeah, it's around 53. Now, if you check under 8 is around 82%. So under 8 market is okay. Under 5 market, okay, because sawa, we can do it as it is, but should be 55% and 55% and above. So the moment umesha spot market iko hivi, the next thing unafanya, unakuja hapa. So because this is for a 25 1S, because we are trading under 8, yeah. The green bar and the blue bar should be below digits, should be below our recovery market, which is that is under 5. That means the blue bar and the green bar should be below digit 5. That means they should be in the range of digits 0, 1, 2, 3, and 4. In this case, you can actually see we have even a blue bar that is on digit 9. That means this market is not safe to trade, because if you happen to get into this market, digit 9 will actually give you that is losses, because you remember, when we are actually trading matches, there's a matches strategy where we normally predict the second most appearing digit. That means the second most appearing digit has a very high potential, that is of getting the cursor. So you should, that's why I had to label these the second most appearing digit with a blue bar, because it has a very, very, very high potential. Yeah. So in this case, even though on this other side the market was okay, now when it comes to the circles, you can actually see the market has failed us. So the blue bar, green bar should be 0 to 9. When it comes to the red bar, hiyo inaweza angukia mahali. Yes, iko na potential, but not that much. But if it happens to be below digit 5, then better. But in case it's above digit 5, well and good. Yeah. So it's actually that simple. So let me see if we can get we can be able to spot in a market. So this, for example, this is under 5. Let's start with under 5 and see if we can get in. Okay, and something else, like, for example, if you check, if you have been watching my videos, I like using, that is a 1S volatilities. But that doesn't mean like you can't use the normal volatilities. You can also use the normal volatilities, only that I love the 1S volatilities because of the speed. Okay, so this is 55%. Let's see, under 8%, it's around 84%. The next thing we do, this is 10 1S. Just click here. Let's go to the circles and see how is 10 1S. Since we are trading under, we said the blue bar, green bar should be below digit 4. Red bar, there's a coup anywhere. In this case, you can actually see it's on digit 7. Okay, but we don't have to wait the market till the market gets better, since this is just a demonstration. But now when you are doing it yourself, that is in your account, you need to make sure that all those factors you have considered. Then let's see, switch to 10 1S and see if the market is on a fall. If the market is on a fall, then you are safe. The market is on a fall. So the only disadvantage we have right now is the green bar. This green bar will actually give us losses. But it will give us losses when it comes to the recovery, because we are trading under 8. That means on under 8 market it has no impact. But the moment this robot switches to under 5, this digit to the green bar can actually give us a mess. Yeah. Okay, just click 5 Apple. It's around 56. The market is okay. Okay, so let's confirm here if the setup is good. It's okay. It's supposed to be 10 1S, setup 10 1S. Then this should be under. Then unakuja hapa. We want to see that is we come on this other side. We need to make sure the candlestick is on a fall. Yeah, it should be on a continuous fall. So the candlestick is on a rise. So hapa unaweza goja kidogo uone kama retest itaingia uingie nayo. Although I recommended, like, when you are trading this market with low payouts, yeah, make sure karakoto na observe sana, because kama hii market nakwambia the market is rising more than it's falling. Because if you happen to start trading with a retest, yeah, when it comes to trading with a reversal, you only need to take about kitu kama 5 contracts. After 5 contracts kutoka hapo market inaweza resume direction ilikuwa inaenda, yeah. So when it comes to trading with the reversal, only do it if you are ready to take short contracts. But if you want to go for long runs, yeah, you want to take about 10, 15 runs, make sure you don't do this. Because if you happen to get in this market, yeah, with a reverse kama hii, unaona sasa hii ina rise and you want to trade a fall, yeah, itakumess vibaya sana, yeah. So, let's see if we can get a reversal. So you make sure you don't just be very careful. Listen to me carefully. Yeah. When it comes to in case you start trading in this kind of a market, this market with low payout, make sure haufanyi hivi, because the moment utapita hapo runs, that is contracts kama 5 itaanza kukuchoma, yeah. The market itaanza kukuchoma. So you can actually see like sometimes this market in a hold. So in case the market haiko sawa, like right now this candlestick is the candlestick is rising. That's why unaona hizi losses zote. Ndio maana nikwambia 5 za kwanza zitakuwa sawa. But the moment this market start rising, yeah, itaanza kukuchoma. Just check the first zilikuwa sawa 1 2 3. What is happening? Okay. Let me stop, yeah. Ukiangalia hapa the first ilikuwa sawa 1 2 3 4, yeah. Because we are trading under, the candlestick should be on a fall. Then candlestick isha assume ile direction yake ianze kurise. What will actually happen? Itaanza kukupiga losses. The market will start hitting that is on losses. That's why I said when you are trading these markets with low payouts, make sure unaangalia characters. Kama hii market ni best for over, in case unaenda those long contracts, ama una trade those market with low payouts. But just in case you just want to take about 4 or 5 contracts, then you leave the markets. It's well and good. But in case unajua like unataka kwenda contracts mingi, make sure you don't get, in case you are trading under, don't get into a market yenye inakaa hivi. Make sure kama ni under, candlestick iko red na ina fall, ama iko green ina rise in case you are trading over. But don't get into a market kama una trade under 8 recovery ya under 5, unataka kwenda contracts kama 15, not even 15 contracts, because if you just go for like you go for around like 5 contracts and you are trading something under 8 with a stake of 5, within 4 or 5 contracts, you'll only have earned yourself about $5, yeah. And sometimes you may feel that is not enough. So make sure when you are getting into that market, make sure unaangalia color code sana, because when this candlestick is green, it actually tells you that the market is rising more than it's falling, yeah. So we need that situation, like hata kama candlestick italitest, tutapiga losses mbili, sometimes 3, then tunapiga recovery. Sasa okay. What if you are trading something under 7? So when you are trading under 7, you can actually start with the recovery market. For example, just click there. You can actually see under 5 market. Under 5 market is a 50-50 chance market. You can actually see this market is around 48%. So you need to switch the volatilities until you find the volatility that is 55% and above. So there's a recovery market. 50. Kama sahi hakuna yenye iko above, that is okay. We have this one. The next thing unafanya, okay, it should be 55% and above, 55% and above. The next thing that you do, unakuja hapo una click under 7 because you want to trade under 7. The chance of winning under 7 market is 70%, yeah. So that means when you are trading under 7 market should be like hapa inastahili kuwa 70% and above. Right now you can actually see it around 74, and under 5 market is actually that is 55%. That means it's okay. The next thing you do, unakuja hapa, unaweka hiyo volatility. Okay, that is 101s. Unakuja na lazima ukuwe na speed. Make sure you have the speed. And before you do that, unakuja hapa una set up everything. Hapa tuna trade under 7. Isikuwe ati after umepata entry ndio unaenda ku set up load bot nini. Sometimes unaweza chelewa. So in this case, the green bar, blue bar should always be below our recovery. Should always be our recoveries, yeah. That means in this case, because we are recovering in under 5, the green bar, blue bar should be below digit 5. Green bar, blue bar should always be below digit 5. In this case, you can actually see the blue bar is above digit 5. So you should wait. You should always look for that market where this blue bar is below digit 5, so that we can make our recovery more easier. Because this blue bar has a high chances of attracting the tick, and that means our recovery will actually be very, very easy. Let me see how many people we have right now. Around 50. I think that's okay. 40, the number is dropping, but it's actually late. Okay, so the blue bar should always be below digit 5. So the next thing you do, if this blue bar is below digit 5, na hapa umesha confirm under 5 market is above 55%, under 7 market is above 70%. So the next thing unafanya, unakuja hapa sasa unaenda kwa charts. Just go to the charts, straight to the charts and set up that volatility. For example, it's supposed to be volatility 101s. Yeah, that market, because you are trading under, the market should be on a continuous fall. In this case, you can actually see, and because I said these are markets with low payout, you should make sure that kama hiyo candlestick, make sure kwanza iko red, because we want to go for it's a market with a low payout. Ikuwe ya red, then ikuwe on a continuous fall, so that at least we are sure that hii market hata kama itakuja ku rise, but at least we are sure the market is falling more than it's rising, so that even if you happen to go for long contracts, uende kama contracts kama 15 ama 10, yeah, hautajipata kama umeblow account yako. Sawa sawa. Kama sasa unaona hiyo market ndio inaingia fall. So if you come on this side and check under 5 markets, it's at 45%, 46%. That means this market is not safe. Let's see. I think at the moment hakuna market base ya under 5. Okay, let's see the market, any market yenye iko close ni hii, this on 51s. So ukipata market iko 55, okay, this is how you do it. I repeat, hapa under 5 is only 55% and above. Ukirika hapo under 7, just in case you are trading under 7, should be 70% and above. So under 7 market is okay, but under 5 market is not okay. Kama iko sawa, unakuja on this other side, unakuja unaweka volatility 51s hapa. Then unakuja unaangalia hapa, this is our recovery market is under 5. So that means blue bar, green bar should always be below digit. Should always be below digit 5. The next thing that you do is so just check green bar, blue bar, that one is okay. In this case we are being measured up by digit 8. The next thing unafanya, unakuja hapa on this other side, unaangalia chart yetu, this volatility that is volatility 51s. Hapa unastahili kuweka volatility 51s, and because we are trading under, the market should be on a fall. So in this case market ndio inaingia fall, yeah. It was the market was on a rise, inaingia fall hapa. Sasa ukishapata everything is okay, unakuja hapa una set up BU. Hapa unakuja una set up under, lakini sasa hapa market inaingia over, yeah. So you can wait for the market iingie, that is ingie fall, then unaweza ingia hiyo soko. Sawa sawa. I don't know nimeweka hata volatility gani, it's actually 51s here. And let's see if the robot has started executing the contracts. Okay, let me stop and reset. We have a lot of history, yeah, but candlestick imeshaingia rise. So you should make sure the candlestick is on a continuous fall, then unaingia hiyo soko, unapiga trade zako na maisha inasonga. Sawa sawa. Like right now hapa ukipiga loss, recover itakuwa ngumu. So just in case you are taking your contracts, then uone market imeshaenda continuous rise and you are trading under, just stop your bot. Make sure you just stop your robot, yeah. So in case you want to trade, you can also be trading something like hapa unaweza kuja useme unataka kutrade kitu kama under 5 hapo. That's okay, but I think this one, if I teach you this, it will actually mess you. So I think let me just leave the other one. Like I wanted to show you like how you can actually go to trade something like under 5 with a recovery of like under 6. So like you trade a high risk market, the moment you lose, you pull back to a low risk market. But if I teach you that, that one is best for people who are expert, people who have been in trading for long. But if I teach you right now, you might not get it. Inataka wasi wamekuwa wakitrade, wamekuwa wakimake profit, na itawasaidia sana. But for newbies and intermediates, it's not safe to teach them such stuff. Sawa. So I'll actually give that is a chance, wasi kama let's say like 10 people, waulize maswali biu, then we can call it a day. So in case you have any question, just raise your hand. Then I give you a chance uliza swali kama tumesonga. Someone, just raise your hand. And once you raise your hand, I unmute you. Unauliza swali biu kama tumesonga. Yes, someone. So the question doesn't really have to be to relate with the errate hunters, bora tu ikuwe inahusu trading. Sawa. Yeah. Someone to raise the hand. I think I had seen several people walikuwa wameinua mikono. Yes. Brian, ulikuwa umeinua mkono. Yes, anyone with a question? Ama nyinyi nyote mko sawa? Yes, through the master. Yes, through the master. That's all.
Thank you very much. I have just two questions.
Okay.
Which is the most appropriate, what do you call this? The number of candles, is 150 or 250?
Okay, that one, you can use 150 or 250 iko sawa.
Either of them?
Yeah, either of them iko sawa, yeah. Just don't go above, that is 250. And don't go below 150. Because if you go less than 150, like the markets are like, hiyo part ya bar, like the market will be moving so fast. Kwa ina fall haraka inapanda bio, so you wouldn't be able to make a good judgment. And again,
Okay,
if you use something like a 500, the market will lag so much. Like if the market moves with just a few ticks, it might not give you a good response. So I would prefer you use something like 150 or even 250.
Okay. Second question is with the 150 ticks. Can I use a candlestick to analyze a candlestick of like 3 minutes? Setting the bot on 3 minutes also.
Yeah, you need to set the robot on 3 minutes. If on the candlestick you are analyzing the market on 3 minutes, on the robot that is on this part, I think I forgot to explain that. On this part, in case you are analyzing with a 3 minutes candlestick, just set up here 3 minutes, so that at least the results can match on both sides. In case you are using a 2 minutes candle, just set up 2 minutes. In case you are using a 5 minutes candle, just set up on this other side 5 minutes. Yes, we have Ellie. Unmute your mic and try to be fast. Someone else can be raising their hands. Yes, Ellie.
Okay, nilikuwa nataka kusema Asante, nimeelewa. Na candles analysis tool na circles zote lazima zifike ile yenye umesema ndio niingie market.
Yeah. So that is so that you can actually be able to get better results. We are combining all of them, because you can analyze the market with just the candles. You can analyze the market using the circles. You can analyze the market using you can analyze with the circles, with the candles. You can use light analysis tool, but you'll actually not have, you'll get good performance, but not the best. But if you now combine all of them, that is when you'll actually have the best winning rate.
Oh, nimeelewa.
Because when you are trading when you are actually analyzing the market on errate analysis, it will tell you like where is the market iko wapi, market concentration iko wapi. But it will not tell you where the market is headed. If you want to know where the market is headed, now we need the candles. Sawa. That's where we need the candles. The candles, of course, ukiona candle inalyze unajua market inaenda over. Market ikianza kufall unajua market inaenda under, yeah. Then there are those instances where like there are those, hata kama una trade over market, the market is moving over. There are those under digits that tend to attract the tick more than the others, yeah. Hata kama utakuwa unapata inaenda market tick inaenda mara 3, like out of 5 tick inaenda mara 5 side ya juu, inaenda mara 2 side ya chini. So that is like the market is over. Yes, the market is over, but which digits which are under zenye ziko na high chances ya kupata hiyo, that is ziko na high chances ya kupata hiyo tick. That's why we are, for example, when you are recovering the market, we are doing a recovery of under we are trading something, we are doing a recovery with over 4. Like we are trading over 1 or even over 2 with a recovery of over 4. We need to have the digit with the green bar and the digit with the blue bar above digit 4 so that we can eliminate those high chances ya hiyo tiki kurudi side ya chini sana sana. Sawa. Because if you are if you are matches trader, if you normally trade matches, you know very well like the second most appearing digit is a digit with the highest potential. The second most appearing digit is a digit with the highest potential. And that's why like when you are trading matches, mostly we normally predict the second most appearing digit because it's the digit with the highest potential. That's why on the right analysis, I have actually I have actually put that is a blue bar that is on that specific digit.
Yeah.
So that is Ellie.
Asante.
Okay, Papa. Someone else we have. Who is this? Hii jina inaitwa aje? Kama ni Alpha ama ni nani? Yeah. I did unmute you. Unaweza uliza sorry. Yes. Unmute your mic. Anyone else with a question, you can raise your hand. Anyone else with a question before we end the session? Okay. I think everyone ako sawa. I think most people ni venye hawajuangi how to raise your hands. For example, una click to hapa for example. Yes.
Hello, PK.
Yes.
Good evening.
Good evening to you.
Okay, I have a question.
Yes.
After your analysis on the percentage on the circles, and now you have moved to charts.
Yeah.
Do we also consider the uptrend or downtrend of the charts, or how do we do it? Or that one is not considered?
It's considered. That's why I said when you are that's why I said like when you are trading this market with low payouts, for example under 8, you need to consider the market trade. For example, okay, yes, that is what made me actually have this class, because utaenda ku trade market with low payouts, for example under 9. That's why you find most people normally blow account with markets like under 9. For example, this is what I mean. Ukiangalia kama hii market, this volatility 51s. Market trade ya hii like trade ya hii market ni fall, right?
Yes.
Okay. Trade ya hii market ilikuwa imeingia rise, yeah? Ilikuwa imeenda rise because you can actually see three candlesticks zilikuwa like trade ilikuwa rise. But now ukiangalia market imecha reverse. For this specific candle, the trade of that candle is fall. The trend of this candlestick is fall. So this means if you are trading market with low payout, kama sahi, this best market for under kitu kama under 9, under 8, under 7. Because for those market with low payouts, you have to take quite a number of contracts before you hit to your TP. So huwezi ingia na reversal. Reversal zinakuwa best ukiingia ku trade market kama even odd, ama market kama under 4, ama over 5, or even under 3, over 6. Those markets are best ukiingia na reversal, because unaingia unapiga trades kama 4, unawini 2, una lose 2, ama unawini 3, unapoteza 1, which is okay. Because now if in this kind of a market yenye kama sahi we have this kind, imesha kuonyesha market is on uptrend, then you wait for the reversal of market ianze kuingia reversal and run your bot. Before your candlestick, if the candlestick was on a rise, that means the candlestick was a green candle. For example, we have this candlestick, it was on a rise and it's a green candlestick. Then ngoja wakati hapa imeanza kupiga retest, ndio sasa una run and start trading that is under. That you'll only have taken about kitu kama 5 contracts before the candlestick resume the trend. So that's why I said if you are trading something under 8, under 9, or even under 7, make sure una trade make sure you are trading with the market trend, so that when that market assuming the market was on a rise, umeingia market ya under with a retest, unaingia hapo. If unakuwa na trade kitu kama under 8, utapiga tu runs 5 kutoka hapo, market itakupiga losses. Ikikupiga losses, it will be very hard for you to actually recover. So the market trade is very much important, especially when you are trading markets with the low payout. But if you are trading markets with high payout, markets that are over 5 or even over 6 or even over 7, or you are trading market like that is under 5, under 4, under 3, those markets with high payout, high risk, high payouts, it doesn't like the market trade is not that much important. You just need to know the direction of the market at that specific moment. Mahali unajua unaingia tu upige contract kama lance kama 4 unatoka. But now under 9 market huwezi enda hapo useme unapiga lance 5 unless unaingia full margin, of which it's very risky because hapo ukipiga loss moja unajipata shakahora. Are we together?
Okay. Thank you.
Nimejibu swali yako?
Yes.
Okay, Papa.
Thank you.
Okay. Someone else with a question? I think hakuna mwenye ameinua mkono saa hii. I think we can end the session at that point. So I'll actually be organizing, that is another class. This is a new week. The reason why I decided to hold the class on Monday is because I think last week I was so much busy, I didn't manage to actually have a class. So come Friday, we might be having, that is another class. Either Friday or Saturday, we can have another class, but of course I'll communicate in advance. Ilikuwa a compensation of the class that we missed, that is last week. So probably that is on Friday. I don't know what we'll discuss, but probably we can do some even odd or even market like over 4 under 5. Yeah. So hiyo haina shida. We'll get we'll close the bridge when we get there. Sawa. Mkuwe na usiku mwema. And thanks a lot for those who managed to attend. Sawa. So just in case kuna mahali ya ukuelewa, I'll actually upload this video on YouTube. You can check out, that is later. Sawa. Mkuwe na usiku mwema.